Hey there guys, how you doing? So some of you may know that over the last few years I've been starting to explore the world of financial analysis, looking at these companies, FTSE companies at the moment, and analysing their financial or annual reports and their financial statements and extracting information that's going to help me identify companies that have got the best chance to grow. So there's no guarantee there that these companies are necessarily going to go up or down, but I'm just trying to cherry pick the best of the best. Who are the best companies out there to invest in that are going to provide us with the best chances or the greater odds of their share prices going up. And what I have built is a criteria that I put these stocks against, and if these stocks meet the criteria, which is quite an extensive list and very difficult thresholds to meet, then they pass, they go through, and they are therefore a company that I put into my watch list, and I'm therefore looking for opportunities to get into these companies. And they may be based on technical entries. It might be a moving average crossover system or something like that, something nice and simple, or it might just simply be buy and hold. So just get in now and hold it for 5-10 years, and in theory, because of the way the company is running itself in a financial sense, because of the profits that it's making, because of the way it's reinvesting those shareholder profits, there is a strong expectation that share price is going to rise over the next 5 years. And I've been running that analysis, and using that criteria, I have been identifying these companies. And I think that I'm onto something rather exciting, and I want to put it out there, share it with you guys, see what you think. I have been sharing it with people now for best part of getting close to 6 months. I originally retained this information purely for me, purely for my own investments. But it got to the point where I realized that, hang on, this is working really well. And I want to share this with the guys that have been following me for years. Now, I've been on YouTube since 2012, 2011. So, we're getting on for good 7 years now that I've been pumping videos out. At varying degrees of frequency, I would add. But over those 7 years, people have found me through my podcast, through my Facebook, through YouTube, all these different means, through the blog, through the website, and they find me through these different ways. A lot of them met me at the seminar that I did in Westminster, and they followed me, and they've been following my work for a long time. And I wanted to share this stuff because I knew it was going to help. I knew it was there was great value behind this, because I was identifying these companies that stood out amongst many of these other FTSE companies, and some of them you wouldn't have never have heard of. Some of these were stocks that I'd never come across before, and these were stocks where the financials just look so solid and so strong. There's company that have got 10 years of just pumping out amazing numbers, and the share prices had been skyrocketing, and I'd never heard of this company before. And some of these were FTSE AIM companies, some of these were FTSE 250, FTSE All Shares, some of them are FTSE 100s, but very few of them are actually FTSE 100 companies. But there are a couple in there. And so I started sharing this process with people, and the results have been fantastic so far. And I just wanted to share with you some of those results of this process, because I'm onto something, and I know I am, and it's going really well. And what's the beauty of this approach is that the criteria is so mechanical and factual that you can pinpoint at what point historically, so retrospectively, would we have taken this company on? When would we have bought shares in this company? And so I'm running this analysis, and I'm identifying these companies that are like, right, this company looks fantastic. When would we have known? When would we have known that this company were passing the grade? And then you can go back and look at the charts and say, right, so if I'd known in, let's say, January 2012, then I would have got in at that price. What's the price today? And you can look at the growth. And the results have been astounding. I mean, I've been sharing a lot of the results, and I'll show you some of the results in this video at the end. But we're looking at about, on average, if you've been taking on these stocks since the criteria had highlighted those particular companies, we'd be looking at about 35% return a year on average. Some years would have been way bigger, some years way lower, but on average over the course of the last 10 years, you're looking at about 35% return a year, which is fantastic. I mean, it's a great return, right? And so then I knew I was onto something then, because we've only found 24 companies using this criteria after scanning hundreds of companies so far, and the process continues right now. It's a long, arduous process. Every company takes about 2 to 3 hours to fully analyze and identify whether or not they're the right company or not, whether or not they tick all the boxes. Here's the thing that makes it different to all these other stock picking services that are out there. This criteria is purely factual. That's one thing. Many of these stock picking newsletters that I've read and these analyst reports that I've read before are very opinion based. The analysts themselves are telling us, I think this is going to happen, or I believe that this company are set for great things over the next 2 years, or whatever, right? And it's all just based on their opinion. I think, I believe. And I never sat well with that, because anybody can predict like that and get a few hits and then use those hits to market what they're doing. And I've looked at this from a purely mechanical, factual sense. So I'm looking at the financial data and I'm saying, right, if the company meets these criteria in terms of the financial results that they're achieving for their business, how efficient they are, how much net profit they're making, what they're doing with that net profit, what's going on behind the scenes. For example, many of these companies are posting, let's say 150 million in terms of profits that year, but when you look into it, they're actually sold off a trademark, or they sold off a patent, or they sold off an arm of their business that contributed largely to that extra profit that they made, sometimes way more than that. And that has to be put into their financial reports because it's an accounting requirement, but it's misleading to the investor who thinks that they've made 150 million that year. But actually, when you look at it, that was nothing to do with a recurring business. That was an extraneous sale of a part of their business that brought in a load of money, but they're not going to be relying on that every single year. That was just a one-off sale. And so when you take that out, when you extract that, because really you don't want to be seeing that because it was just a one-off, and you want to look at just the recurring business, you find out they're actually making a loss that year. And so investors, lazy investors that are looking at this, they go to these websites and they look at these fundamental numbers that these websites just provide them with the summary of, like, right, they made 150 million net profit this year. Oh, great. What's their PE ratio? Oh, that looks solid. I'll invest. People are doing that left, right, and centre. And actually, if they'd done the numbers, if they worked out and crunched the numbers and looked at what was going on behind the scenes, they find that company made a loss this year. And so it's going through that process. It's identifying these kind of holes in the business and looking at what's actually going on behind the scenes. And if a company passes all these criteria, all these tests, then they're in. And they have to keep passing that criteria. They have to show 3 years worth of consistent growth in that area, in ticking all those boxes to make it onto my watch list. And so the process and the kind of the bar is pretty damn high. The standard's pretty high. And I've been going through this, and I've identified so far 24 companies that have made the grade. And I've been sharing this with people that are part of my inner circle, and I've just started sharing this with people on a completely new service, which maybe I'll talk about at the end. But I just wanted to show you guys, give you guys an insight into the performance of this in a way. And I want to show you guys using actual results, because it's so easy for people to say, well, look, I picked this company, they did really well. People can say that, and no one can fact check them. Like, did they say this? Did they tell you to buy this company? Well, yeah, I did. And I want to show you guys some evidence of that to show that I'm not talking out my butthole. Okay, so this is the website that I use for posting some of the reports that I do. I now actually only do these on email. I no longer put them up on the website, but these are still there from when I did. And that's a recent development. But as you can see, this is an analysis report that I'd done for Diploma PLC, DPLM, and I did this on June the 20th, 2019. So we're only talking, 4 months ago. This was 4 months ago that I posted this for my exclusive members that basically got access to this information. And really this was just a case of, guys, look, I've looked at this company, I've gone through all the numbers, this is what the numbers are saying, this is why this company passed the grade. That's all I'm doing. I'm not saying that I think that this is a great company. I'm not giving any personal opinion. It's all factual, and I'm just saying, guys, these guys passed my criteria, and this is quite rare. And this is how they passed it. This is what the numbers are saying, and I like them in that sense, and I'm putting them in my watch list. If you guys want to jump in on this, this is the data, this is the information, this is why I like this particular company, is because they passed all the grades. But there's no sort of personal preference there or anything like that at all. I'm not guessing, I'm not saying that I think it's going to go to a certain price. I have no idea. But these guys are running themselves very, very well, and all the factual data is supporting that. So I said this on June 20th, and on June 20th you can check this in the charts if you want to, but Diploma was trading at a price of £15.94 on this day when I shared this. Diploma is now trading at £16.87, so we're up. We're literally in the last 4 months alone, it's up, and it's doing great. We would have known about Diploma had I run this analysis, looking retrospectively. When would we have known that Diploma passed the grade? We would have known about Diploma back on the 1st of October 2012. That's how long they've been performing so well. And the signal, if you will, would have been triggered on the 1st of the 10th, 2012. That's when, had I been running this analysis back in 2012, I would have been telling everybody, these guys are making the grade and they are looking superb, and maybe it's time to get in. And back then they were trading at £4.80 a share. So today they're now trading at £16.87. So we're looking there at about a 250% return on Diploma. And that would have been over about 6-7 years, right? 7 years. So 250% over 7 years. It's pretty damn good. I mean, we're looking at a good 30%. Is that right? Roughly? Not sure. I haven't got my stats here. Had we got into Diploma just in January 2019, we'd be up 35%. But we're up from this report going out on June the 20th from £15.94 a share to £16.87 a share. So you've nearly made £1 per share on this already from the point of me sending this out. So, one example is like, okay, cool, that's easy. Let's look at another one. So the next one that went out, Fisher James and Sons. So again, I did another analysis report. You can see here the date that it got published, 27th of June 2019. You can go and look at a chart right now and see that Fisher James and Sons PLC, who are a ship-to-ship transfer marine testing services company that do lifting excavation services. You can see that in the post down the bottom there. These guys were trading at £18.80 a share, now trading at £19.76 a share in less than 4 months. It's gone up nearly £1 since I posted this and let people know that these guys were making the grade. That's 2 hits, right? Okay, cool. It's a good start, right? It's looking pretty good. So then it's a case of, okay, let's have a look at PSN. Now, I posted this on July 5th. This year, 2019, telling people that Persimmon PLC, the home building company, were also smashing it in terms of financial figures, in terms of their financial reports and all the analysis that I did. They were doing everything right in terms of what they were doing with their money, in terms of how much money they were making, in terms of, were the company profitable enough? What were they doing with that profit from the shareholders' point of view? How were they reinvesting that profit? Are they doing the right things? Ticking all the boxes. And so I put a report out on the July the 5th saying these guys are ticking all the boxes. This is how they're ticking those boxes. These are the numbers. If you want to get involved, get involved. I also did a YouTube video on this relatively recently, and I got stung. I got proper stung because people were messaging me going, haven't you seen the news? Haven't you seen all the investigations that are going into Persimmon right now? This is a joke. Like, you're sitting there telling people that they should buy this stock, and you're not even looking at the news and seeing that their trouble is ahead. And I was just like, right, I'm not predicting anything. I'm not predicting these companies are going to do well. I'm just saying that I've run the numbers, and the criteria that I've put together of what I'm looking for has identified Persimmon as a company that have got a great chance of going up in share price. Despite the news, I don't care about the news. I don't care about opinions and predictions. I'm just looking at the facts, and the facts say to me that the Persimmon share price has got a great chance of going up in value based on the way this company are running themselves. Now look at the share price of what it's actually been doing since July the 5th. I can tell you right now, without even needing to look at the chart, because I've written it down in front of me, of course I have, that at the time of this report going out, the share price was £19.56. This was when everyone was telling me I was an idiot for picking them, right? They're now at £23.36 in 3 months later. So had you jumped onto Persimmon on July the 5th, we would be up £3.50 a share. Like, it's pretty awesome. And I'm telling you, I'm on to something here, and it's exciting. I'm excited, because I've been sharing this stuff now privately with a private group of people. I haven't been putting this much on YouTube or in Facebook much. I've been sharing it with my private inner circle guys, and it's working, and they're seeing results, and I'm seeing results, and I know this stuff works, and it's very exciting, right? That's the third company we've looked at, and they're doing great, these companies. They really are working out. The other company I want to look at is Smith & Nephew. This is a company that on July the 12th, I was letting people know they're passing the grade. This is one of the few companies, this is a FTSE 100 company that specialises in hip and knee replacements. These guys are smashing it. And they're not just smashing it from a share price point of view, but from the financial aspect of how they run their business. These guys are doing absolutely fantastic. I nearly swore then. And so I put a post out July 12th. I said, these guys are ticking all the boxes. Just so you guys know, in the inner circle, Smith & Nephew PLC, Epic code SN, are ticking every single box that I'm looking for, which is very rare for any company to be able to do. So therefore, maybe take a look, right? That report went out on July the 12th, 2019, so not that long ago. It's 16th of October today, so 3 months ago. And the share price back then was £17.40 a share. Today it's £18.56. It's gone up over £1 a share since that report went out. When would we have known about Smith & Nephew? We would have known on the 1st of the 1st, 2012. So on the 1st of January 2012, it actually would have been the 4th of January because the markets went open on the 1st. But the 4th of January 2012, to be precise, would have been the date that we said, right, it's time to get in on this company. They ticked all the boxes. They've been doing so for long enough now to meet the criteria. It's time to get in. Back then, the share price was riding at £6.35 a share. Like I say, today it's at £18.56. We're looking at a 200% return in the last 7 years on that particular stock. And there are other companies, I'm not going to go through all the different companies that I've identified because I'm devaluing the watch list then. There are people in the inner circle that have got access to the entire watch list. And I'm not going to give you guys on YouTube all of those companies because it devalues what they've got access to. I don't want to do that for them. So I can't sit here and go through every single company. But let me tell you this, it's got a 95% win rate. So of all the companies that the criteria has identified, 95% of them have grown in value, in share price value. One of them is lower. The rest have gone up. So I think that's pretty damn awesome. It beats the FTSE, it beats most of the indices, it beats many of the big funds out there. I look at the performance of the funds, the mutual funds, the hedge funds, the index funds that are out there, and I'm looking at their results and I'm comparing them to the results of this approach, and it's beating so many of them. And so I know I'm onto something here. This is a unique criteria for putting stocks against to see whether or not they pass or not. And the ones that are performing. The ones that are ticking all those boxes are doing fantastic. And they're not necessarily, you don't have to wait necessarily for 5-10 years before you start to see that return. This is stuff that's happening over the last 3 months since I've been reporting it and posting it to people. So I was excited to share that, and I wanted to show people that there is a way to fine-tune the stock selection process. I've spent many years focusing on the technical side of trading, when to get in, when to get out, how to manage your risk, where to place your stop loss, all that kind of stuff. But I've always had this kind of area where I've just kind of almost pinning the tail on the donkey when it came to stock selection, and it's always been a bugbear for me. So I spent the last few years studying how do you pick the stocks, how do you become more sophisticated in your stock selection criteria. And I tried many different things until I came across this, and I started to create my own criteria of what I was looking for in a company and putting all these companies up against it and then looking at the results, and it works so incredibly well because I'm so excited when I find a company that's ticking all the boxes and I've never heard of them before and I never would have considered looking at them before. And sometimes they're tiny little footsie AIM companies that are turning over 100 million a year, which is nothing compared to the most companies we're looking at. Or some of them are turning over like 8 million a year. I found a pharmaceutical company that was doing fantastically well just the other day. And some of these are turning over very small amounts of money, but they're smashing it. They're doing such a great job of running at such a profitable amount, and they're investing that money, and they're doing everything that I'd want them to do, and they're ticking every single box. And I'm thinking, these guys' share price is currently at like 62 pence, but that's going to go up. That's going to fly up if they carry on running in this way. And I find that extremely exciting, identifying these small stocks. But if you want to get involved in this, if you want to start to see what this criteria is identifying and use that information maybe to create a watch list of stocks that you might want to share through share dealing, the traditional sense, or even spread bet these companies, then there'll be a link underneath this video in the description. Feel free to click on that link and it'll take you to a page that tells you a lot more about what I'm doing and how to get involved in that process if that's something that you're interested in. But I just wanted to share it. I just wanted to show guys, look, I'm not out there saying I think this company is going to do really well and then look at me, how amazing I am, boosting up my ego. This isn't an ego trip. I'm excited to share this because it doesn't involve my ego. It doesn't involve any skill in prediction. There really isn't much skill involved. I've just gone out there and I've studied how to do this, and I've put together a criteria of what I'm personally looking for in a company based on what I've learned, based on the books and the courses I've done, and learning how to rip apart and interpret financial statements. And I've worked out, right, what's important to me then as an investor? What am I looking for? And what do I want to know about this company before I will invest? And how are they doing what they're doing? And how are they, where's the money coming from? And how much are they relying on invoices that haven't been paid yet? And how are they handling debt? Are they using debt and making better returns on the debt that they're borrowing? Where are they investing their money? How are they investing their money? Are they acquiring other businesses, or are they paying dividends, or what are they doing? And I analyze all of this, and I've got a criteria that I put it against, and if it passes that criteria, they're in. If it doesn't, they don't make the grade. And that's it. And it's working really well, and I'm very excited because it's working really well. And retrospectively as well, it's not just a fluke over the last few months. A lot of people will think, well, yeah, bull market, you're doing well over that period of time. Anyone could have picked a few stocks and started doing well. True, absolutely true. But then when you look at this retrospectively and you say, okay, but when would we have known? When would we have known this company were right, when they were ticking all the boxes? And then you can set a definitive date that says we would have known on this date that this company, on the release of this annual report, once we'd read that report and put the numbers into our thing and run the analysis, we would have known. So therefore, this date we would have known, and what was the share price on that day? If I'd gone out there then and bought 1,000 shares in that company, what would the price have been, and what would those shares be worth today? And you can do that. It's black and white. It's factual. It's mechanical. And the results are staggering. I mean, like I say, I'm not going to go through all these different companies because I don't want to devalue that for the people that are already in this group and part of it. I don't want to be giving it out into the public domain, but you can see from those 4 examples of stuff that I've just posted recently that, you know, these are great companies that are doing well and their share prices have got a great chance of going up. So yeah, I'm excited and I just wanted to share that with you guys. And if you're interested, there'll be a link in the description below. Come and get involved. And if you want to chat about anything, leave a comment. If you want to get in touch with me via Facebook, feel free. I'm on there. I'm open. You can message me any time of the day. I'll get back to you as soon as I can. Obviously, I do have a life and I do have a family, but I will get back to you as soon as I can. Or you can email me, chris@thecleantrader.com. Otherwise, thanks for watching, guys, and I'll catch you soon. Cheers.